Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Today's guest is John Barnes, and our theme is recognizing your inner voice and how it affects you trading with John Barnes. John Barnes serves as Rethink Senior Consultant and Performance Advisor. His life's passion is optimal human performance. John was one of the most consistently profitable options floor traders at the Chicago Mercantile Exchange and has been ranked as a top 20 Illinois amateur golfer for more than 5 years. In addition to his role with Rethink, he trades several portfolios across multiple global markets with double-digit yearly return. Starting as a runner on the floor of the Chicago Board of Trade upon graduation from Indiana University, John quickly learned to read market dynamics while building strong relationships with key traders. This opened the door for his position as an options clerk, which led to his position as an option market maker on the trading floor of the Chicago Mercantile Exchange from 1994 to 2014. John profitably traded his own account for the majority of his time spent on the floor. Through the years, John also realized that optimal performance is not something that can be achieved independently. He sought out experts across multiple fields, creating and customizing his own master's level program. Some of his professional consultants include Dennis Schall of Rethink, Dr. Michael Gervais, PhD, high-performance psychologist and co-founder of Compete to Create. He is now studying at the Boston Graduate School of Psychoanalysis, an institute whose teaching aligns with Rethink's unique angle on human performance and modern psychoanalysis. John thrives on sharing his knowledge and experience with others. He knows how to connect high achievers and those that want to be to the emotions that will embolden their achievements. When he is not reviewing technical analysis charts, evaluating multiple trading screens, driving for greater profits each day, or playing a round of golf, John sits on the bucket of baseballs near the dugout coaching little league for his 2 sons. Welcome, John. Quite an interesting trading bio. It's actually an honor to have you on our trading. And I have read out your bio, but maybe you can just tell us a brief history into trading with over 2 decades now of your trading experience, starting out with 18 years on the floor and transitioning to being a trader in the financial markets, and why you're really passionate about coaching.
Wow. Okay. So where to begin? Thank you for having me today. I'm really excited. I'll try to make sure that I speak slowly because I get a little excited and start to speak quickly. It looks like it said my internet connection is a little unstable, so hopefully that's not causing too much of an issue. Trading for me, growing up in Chicago, just outside of Chicago, I would see it on the news occasionally, and it looked really cool, the chaos of everybody jumping around. Obviously the lure of people making money. And I decided when I was in high school to take the train down and try to get a job. So I went, looked at the visitors gallery, looked at the trading. This is back in the day when they were packed. Lots of people were on the trading floor, not so much today. And I went and tried, I knocked on every door, didn't get a job. And so between my freshman and sophomore year of college, I was able to get a job as a runner, as was said in my bio. But the first day on the trading floor, I was following another runner in to figure out where all these orders go. And I was in the soybean futures pit when the bell rang and pandemonium ensued, and I got goosebumps. And I'm like, this is what I want to do. This is so cool. And so from that point forward, I basically tried to study everything I could. I got everything from every exchange that would send it to me. I read books about trading, and I wanted to be a trader. And I was lucky enough to get hooked up with a proprietary trading firm that taught me how to trade options effectively. and I traded on the floor of the Chicago Mercantile Exchange in the feeder cattle option pit for a long, long time. And as the floor started to go away, I started to transition in trading multiple systems, mechanical, discretionary, and I helped run an algo for a while toward the end of my trading career. And, I found that off the floor trading, I said this earlier to Sylvia, and that off the floor trading, I needed to trade less, so I had more time. And during this time, I was working with Denise, she was my mental coach, and she said, you'd be good at coaching this type of stuff if you were interested in doing it. And so I said, yeah, I spent a long time fighting with people. Now I get to help people, and so I love being able to. And the ability to see, hear, and feel patterns like I did on the floor is equally as important in coaching, because my method is really to listen to what the client says and try to find patterns within that, and then dive in and dig down to see which patterns are helpful and which patterns are less helpful. So for me, the applicability of my trading skills to coaching has been clear and a lot of fun. I love helping my clients. It's the most focused and dialed in I am during the day, other than when I'm looking at, moving money around trading. So yeah, I hope that wasn't too rambling.
All right. And yeah, that's really interesting. And maybe you can tell us, because as traders, we tend to experience, there's the money side of trading, and then there's the mental side of trading. So like for you as a coach, how do you help traders who have trouble balancing the two when it comes to their performance, for instance, with your clients?
Mm-hmm. Again, for me, it's listening to patterns of thoughts and behavior. I would say the primary thing to me, the most important trading is risk management, understanding what you're risking, having a philosophy around risk management. And so I talk to my clients a lot about, okay, is that the right risk? And the other thing that we work on is it's this interesting phenomena that I see, that we have all these trading axioms and maxims and sayings that we have that are super helpful initially. So, let your winners run, cut your losers. And really those are good, but at some point, you have the training wheels come off. And a good example of this is this idea that a lot of people have a system that they've back tested, but very rarely are they able to trade it according to plan once it happens. And therefore, you're not trading the system you back tested. Another thing I see often, and I talked to a client about this week, is, people are, at times, traders want to harvest profits, which is fine, I get that. But then, it's my opinion that then you need to take less risk, because you're truncating your rewards, therefore you need to truncate your losses, or else your system dynamic is going to be out of whack. You're never going to be able to get the returns that you projected. So those are some of the things that I look for. Again, it's individual, everybody's different. I don't necessarily dive into the specifics of a trading plan. I like my clients to speak in the language or lingo or syntax that they use in their mind and with other people about their system. And that's what I pick up on, and that's what I use. Did that answer the question?
Absolutely. Thank you for that. And then there's this quote by a trading psychologist. It says that a quiet mind is able to hear intuition over fear, by Yvan Byeajee. I think that's the pronunciation. So as a coach, do you agree with that statement? And what can you say about fear when it comes to crippling traders' performance?
So I absolutely agree with the quiet mind hears intuition over fear. For me is not as relevant, because it's my belief as we're able to put words around how we feel, what we think, that emotions start to flow through us more naturally. Like emotions are there to give us information. End of story. And so when we don't listen to that information, that's when the volume of the emotion. Another kind of thing that I think about is this idea of Freud's repetition compulsion, which I'll talk about in the talk today. But usually when an emotion is super, super intense, it's about something from the past being superimposed in this moment in the market. And the market's certainly unique in the ability to do that, because the intensity is there, a lot of uncertainty. So it can stir up a lot of emotions from the past and get them over the market moment. So we're not really seeing the market, we're seeing the past emotion. The other thing about fear is that I think all emotions are good. And if we didn't have fear, we'd have more people, putting max positions on and seeing what happens, flipping the coin. On the trading floor, we used to have what was called the O'Hare spread. So O'Hare is a big airport in Chicago. And the joke was always that you sell a bunch of S&P futures, go to the airport, call in at the end of the day. If you made money, you went home. If you didn't, you took the plane and went somewhere else. So that's an example of, if we didn't have that fear, there'd be a lot more people taking the O'Hare spread. And again, happiness, joy is the same way, because when it becomes super intense, it clouds our judgment of risk. And that's really what we're talking about. So the fear for me is twofold. One, it's this idea, if it's crippling, if it's super intense, it's probably about something from the past that needs to be worked through, thought about, dug into. And two, all emotions are information, and no emotion has ever really lost money.
All right, thank you for that. It seems to be a recurring theme when it comes to people's background and how it affects their trading. Do you think our childhood experiences end up affecting maybe our personality types when we become a bit older? And also, does that also affect our trading?
Yes and yes. So again, the repetitive nature of the unconscious is always trying to give us the opportunity to work through issues of the past. And again, the market is really good at giving us that opportunity. Whether we use it productively or not is often a challenge. And again, yes, this idea that our past, it definitely affects our future, and up to and including how we were taught. Like a perfect example is, as traders were taught, or at least there's a lot of stuff out there, certainly when I was coming up, that we need to take the emotion out of it, which is exactly the opposite of how floor traders traded, right? Like if I was upset about something, I could scream to the top of my lungs. People would look at me like, what the heck's wrong with you? And that would be the end of it. If you do that in the supermarket, it's a different story. So, on the trading floor, I was able to vent and have all the emotions I wanted to. I could scream and yell about how happy I was about a trade. And so for me, that was the perfect environment, because the emotion just was flowing all over the place. And for me, that was a different experience. I was always growing up kind of putting a lid on my emotions and trying to be more stoic. So I believe that we all have a personality type, but the more we could really go through what we're going to go through today, understand how we feel and why, the more we're able to let our true selves come out in the moment, and the less we have to respond from the past.
Yeah, very true. Now, when it also comes to trading, there are those periods where our emotions kind of get out of control. I think in a trading group that I'm in, it happened this week, and we could see the emotions just go all over the place. So how does someone regain control over those intense emotions?
So again, for me, it goes back to the emotions as information. So the emotion is trying to tell us something. Usually when it becomes super intense and out of control, it's because we are unable or unwilling to have whatever feeling our body and mind is trying to get us to have. So if in trading, if and I had a trader talk about this past week, where he was in a trade. Clearly, he was talking about the trade being over or no longer valid. And he said, well, when I got in it, it was a good setup. So he was kind of anchored in that moment of the past of the entry, rather than listening to what he was thinking and feeling in the moment. The information was changing. He was seeing it clearly, yet he didn't want to get out of the trade, right? And this is often played out in this idea of, well, that's why I have a stop. When we know the trade is over, we let it go all the way to the stop, because that's why it's there, and it could come back. And, it gets into all of that circular argument of, well, you never know what the market's going to do, and it could come back. And I last time I did this, I got out and it went my way. And, for me, that's a pattern that I watch for my clients. It's almost automatic. When we know that we need to get out, we immediately, when we feel we need to get out, we immediately go, well, this oscillator is good, the price is here. We try to intellectually convince ourselves to stay in. And, for me, it's like 5 or 10% of the time that the market actually comes back. And over time, giving up the money, letting it go from price A to our stop, over time that adds up.
Mm.
So is that clear?
Yes.
Yeah, and I think we're ready to learn now from your presentation.
All right. Well, thanks again for having me. Hopefully over this time, we'll learn about how to really use our inner voice and self-talk to go from the chatter that we often feel to an intuitive type feeling, where the self-talk is more bodily based and holistic, and less head mind based. And so over here, this picture, this is the live cattle futures pit circa 2005 or so. And, again, as I spoke about earlier, you look at these faces and there's all sorts of emotion in there. This guy, Murph, he obviously just got run over by something. The guy behind him is trying to make something happen. Some people are laughing, having a good old time. It's, and for me, it's this idea of there's beauty in the chaos, but that's a little bit esoteric and a little bit out of touch. But anyway, so we talked about this already. I've traded a lot. I love trading. This performance coaching thing is super interesting. I love how at the Rethink Group, we combine the latest research in emotions, the neuroscience around emotions and how we use our emotions, but we also use techniques from modern psychoanalysis, which I'm working through now, and working with Denise on a regular basis to get better at my coaching has been a huge blessing. So here we go. What is our inner voice? And for some reason, Silva and Stevens did a research report, and they came up with this: our mental voice, or it is our mental voice or internal dialogue. Seems pretty obvious. I'm not sure why they took a research paper to do that, but that's okay. So the next kind of definition here is the voice that's always yelling at us to do something. Get out, stay in, get out, stay in. Ugh. And then it's the internalized voice of a significant person from our past, a parent, teacher, or coach, more likely a parent. And so there are times when we don't want to give up that voice, because we don't want to give up the attachment to the person whose voice it really is. So this poor guy here has all sorts of stuff rattling around in his brain. And, I see this as 3 seconds and it's all of this, random stuff, gold, God, hope, everything all over. I deserve a Lexus, just win. God's angry with me. That's why I'm not getting unforgiven. It's just all of this chaos. So what's the point of the inner voice? I believe it's to move us forward towards our goals. So once we get the chatter to really calm down, we're able to hear more of the intuitive, holistic voice, as I said before. It helps create shortcuts to action. As we'll talk about, our brain's always predicting. And if the voice can be there, there's more of a free flow between thought and action. And really, this is where we're going to focus today. It's to give voice to our emotions. The inner voice is always telling us what emotion is going on. And if we listen to it, we get a lot of information. The other thing too is that it seems to me that most of us go around the day looking for a metaphorical stick with which to beat ourselves. And that sounds a little harsh, but I've done it a lot, and I've seen my clients constantly have that come up as well. And then finally, it helps us hold on to the person whose voice we have internalized, which I just said. So let's move on to the next one. How do we quiet the chatter? And I assume my experience isn't limited to me, but this idea of the chatter just happening all the time is the way it's unsustainable. How are we doing? Okay.
Yeah.
Yes.
So, okay, great. And so to quiet the chatter, really the first step is to recognize it's there and listen to what's being said. Right? We all want validation, even that little voice in our head. And once we start to recognize it, we're able to then organize it. And so putting the correct word to the feeling, as we'll talk about, will also help lessen the chatter. And the chatter also, good self-talk also creates a check in our process of, don't forget to, for example, the person trader I spoke about earlier, he exited a copper trade because we worked through what was really going on. And then I said, did you cancel the stop? And so that idea of exit, oh yeah, I have to cancel the stop. That type of self-talk is obviously very productive and helpful. And then really the brain's always searching for certainty. That's what the brain does. The brain can't stand uncertainty because the job, as we'll talk about, is to keep us alive. And that's the experience of being uncertain in a trade or about taking a trade. That's why when we press the execute button, we feel a relief. Oh, good. I got in that trade that I really wanted to get in. Or, oh, good, I'm out of that. Sometimes when we act a little bit impulsively, that relief turns into despair, but we'll get into that a little bit later. And then asking the superpower question. So for us, the superpower skill or question is, what am I feeling and why? We can't ask that enough. And really for me, initially is, what am I feeling? The why part is good, but there's not a whole lot of need to dig into that. I just say why and let my unconscious work on it. And so what am I feeling? It seems like a pretty straightforward question, but as we'll speak about, I've had clients and oftentimes myself of, there's all this constant chatter in my mind. And then, I ask, what am I feeling? And I can't come up with any words. And so again, when that happens, what we can do is say, okay, I'm tired, I'm hungry, whatever, my arm hurts, whatever the case may be. And so here, this is a research from 2017, and it basically says is we can differentiate our emotions under specific setup, we can have higher returns. So for me, that means in your trade setups, understanding all the emotions that are going on can help us make better decisions and therefore make more money. And then again, for me, I'm really attaching this idea of self-talk to emotions, our inner dialogue, our emotions trying to give us information. And so this is just saying that emotions are there for a reason to help us. They're not there to hurt us. And when we get into trouble is when we say, well, I can't feel X, usually anger, fear, whatever. But, again, fear is a valid emotion in trading. Risk, I believe, necessitates fear unless, like the free solo guy, he has, in my opinion, he doesn't have enough fear. It seems to be working for him for now, but in any case, Alex Heinold, that's his name. So emotions are built by your brain as you need them. The brain uses these emotions to predict what will happen next. And so what is really happening is our brains are using input from our bodies and going back in our memories to figure out what's really going on and predict what will happen next. Let's take a quick detour here, and we're going to talk about the brain, how it works, the misconceptions that we have about the brain, and then some techniques on how to really do a good job of figuring out what words are there. So the brain's only job is to keep us alive. It's to keep all the systems in the body functioning and in balance. Ensure hormones are secreted correctly, salts and blood, everything is balanced. Obviously that happens under our conscious understanding, and it happens automatically. And the information the brain uses to keep us alive comes from input from our bodies that I just said, and combining that with memories. And we can always predict what will happen next, or that's what it does to help predict what will happen next to keep us alive. And so as it says here, we're always predicting what will happen next based on past experience and how our body feels. And as I spoke about before, the brain craves certainty. It hates uncertainty. That's why it's really hard to sit in a trade that's at a decision point and take some counterflow. I mean, we're all traders, so we understand what that means. It's this idea of the trade could be continuing, it could be stopping. There's not a whole lot of information to decide one way or another. So the brain wants to say, get out, stay in, and be done. And that's obviously not how trading works. It's much more nuanced. All right. So a good thing to do is really expand our emotional vocabulary. And this is emotional differentiation. This is effectively what this means is the more words we have, the more emotional words we have, the more we're able to put a word to a feeling. And in our experience, when that happens, when we put the right word with the feeling, the intensity or energy of that feeling dissipates. So feelings have energy and they create energy in us. And that's why when we choose not to listen to them, our brain will then increase the energy or the volume in our mind to say, you have to listen to me. This is information you need to listen to. And if we choose not to listen to it, it keeps trying to come out more loudly. And that's when we get into this crippling, stuck feeling. And it also, we find it, or I found that it can come out in different situations. So if we're unable to feel, fear or anger in the markets, then when somebody cuts us off in traffic, we explode because that's the easy thing to do. So I would highly suggest finding a spreadsheet or something with a bunch of words on it about emotions and putting it next to your screen. So the next step here is emotional granularity. So emotional differentiation is just lots and lots of words. Emotional granularity is really kind of being specific and nuanced with your words. So, it's this idea of rage, anger, annoyance, and frustration. They all kind of mean the same thing, but it's a very different experience, and kind of the happy, content, excited, and hopeful. They all kind of have the same root, but it's really different experiences. And the more specific and nuanced we can be with our words, the more able we are to validate the emotion, and therefore the emotion will flow through us and we can see the present moment for how it is rather than how we want it to be. This is just some research saying that, you know, emotional differentiation and granularity are helpful in trading and in life, really. So the second one, emotional differentiation improves a person's ability to resist biasing effect of emotions on judgment. So this is this idea of being anchored in the past, as I spoke about with my guy who was anchored to the entry. A lot of us get anchored to the entry. I also find this in people that trade multiple timeframes, that they will kind of jump back and forth and forget about which time frame the trade is really happening on. So for example, you take a daily trade, and I have a guy that does this all the time. Trades on the daily, he's watching the 60-minute. As soon as the 60 minutes starts to show some problems, he gets out of the trade. And we talk about that all the time, that keeping our focus where it is important, but it's also really hard too. Trading is hard. Trading is hard. Oh no, not again. This guy is not happy. And I feel that way a lot with trading. Less so now, but I used to feel that way a lot. And so what this means is, again, it's back to this idea of, I thought I solved this. I thought I put this rule in place that would take care of this repetitive mistake. And what we found is that I found initially that creating a rule-based system that we follow by rote is important. But then as we start to understand ourselves and the system better, it becomes less important. And it becomes, in my opinion, more important to listen to what we're talking about as we get our self-talk more dialed in. So again, this goes back to Freud's repetition compulsion. Denise wrote a white paper on this about how Freud's repetition compulsion affects us in the market. And the market's always prodding us and giving us the opportunity to work through. So I don't know if I explained this already, but Freud's repetition compulsion effectively means that our unconscious is always looking for opportunities to work through issues from our childhood. Now, whether you believe it or not, it doesn't matter. A repetitive mistake is fine. I also believe that it's unnecessary to go back and trace it all the way back to the initial moment where it happened. I don't believe that that's necessary. I think just knowing that these situations create a repetitive response is important. And so what I found personally and with clients is that when we have this repetitive mistake, it's usually preceded by a consistent set of thoughts and emotions. And so once we can dive into what those are, we can start to move the timeline back to before the trade, which obviously is what we want. And the more we can hear our self-talk clearly, the more we are able to understand ourselves and therefore have choices about how to respond to situations. It's this idea of, again, back to the traffic thing, or probably a better example is this idea of impulse in trading. And we had that trade set up and, dang it, we missed it. I got to get in now. And if we understand that, okay, I missed it. Why did I miss it? Because I was too cautious. Why do I want to get in now? Because I don't want to miss the trade. And as we become more clear and even use more words around that, we're able to respond and say, I missed the trade. There'll be another trade. Or this is really early in the trade, I'm going to get in. It's still a relevant trade. And again, the goal is to cut out the automatic response to situations, give ourselves choices. And the more we can be clear about what we're feeling in a moment, the more time opens up or space opens up to make that decision. Okay, so great. Now what? Well, with practice, we can answer the superpower question with the correct words. And once we do that, that constant chatter goes way down. for me, I really don't have a lot of chatter in my mind anymore. It's just, I recognize what's going on. Obviously, I have intense moments, and those continue to happen, and they'll always happen, but I'm getting better at understanding them, and therefore they're becoming less intense. And this idea that intuitive thoughts and feelings, I believe, is the mind's or the brain's way of operating at optimal level. So once we clear the chatter out, we're then able to use our bodies and brains to really understand what's going on and really dive into our intuitive understanding of things, our unconscious pattern recognition, right? We've all done this a lot, looked at a lot of charts. There's always something there. And so after a while, our body starts to recognize it before our brain is able to. And that's kind of where we are with this intuitive type understanding of markets. Excuse me. And then, yep, the intuitive feeling gives us a lot of information. Once our mind is more balanced, so our thoughts and emotions flow naturally through, it opens the door to hear our intuitive thoughts and feelings, and really to let our real selves trade. So this is kind of an aside into this idea of interoception, and that's really being able to feel what's going on in your body. And then this David Eagleman quote, he wrote a great book called Incognito and the PBS series, The Brain. The first thing we learn from studying our own circuitry is that most of what we do, think, and feel is not under our conscious control. And that's this idea of the brain predicting everything that's going to happen. Like right now, even though you're not aware of it, you're predicting the next words that will come out of my mouth. And so it's just a kind of an automatic response. And the more we can understand what's going on below the surface, the more we can have choice about what we do. And this is a kind of a quote on intuition. And what this means is that when people start to recognize what feelings they have, which ones are intuitive and which ones are not, especially when they're in the context of doing something, meaning trading, it brings a lot of information together, and it's a much more complete picture of what's going on than just being totally focused on price action, for example. So all these crazy guys, so why miss this edge? And again, I think self-talk is focused around emotion. And so why miss the edge of emotion? And so again, here are some quotes from research papers. Emotions are responsible for guiding and controlling our behavior. Emotion determines how we perceive our world, organize our memory, and make important decisions. Emotions are intimately related to actions. So again, the more we can understand what's going on in our bodies and minds, the more able we are to be in the present moment and make a decision about here and now, and also give ourselves choices about decision to make and make less automatic decisions. So the practical aspect of this that I work with my clients on is just this idea of recognizing what you feel, asking that superpower question, what do I feel? And again, if you're struggling at first, I feel tired, I feel hungry, I feel, usually it's excited, and over time, two things will happen. You'll see patterns, and it could be the pattern of you feel excited every day. Great, love it. But what really is the feeling? Maybe it's not excitement. Dive in again, going back to this idea of emotional granularity. What really is there? And then while I think this skill of understanding what you feel and why is important for everyday life, what we really want to do for trading is understand what's going on in the moment of a trading decision. So that's as a trade sets up, executing the trade, decision points during a trade, exiting the trade, and after the trade. And there's also something to recognize that's important, that usually we feel badly after we're done with a trade. If it's a loser and we get stopped out, obviously we feel badly because we lost money. If it's a winner and we get out, even if we get out well, there's almost this feeling of loss, this feeling of, oh man, that was a good trade. Now it's done. What do I do now? Maybe I'll never be able to find a trade again. And so there's those feelings that come up after a trade. And so just being able to recognize all of our feelings and give them voice is very important. And then what combinations, as we get really good at this, we're able to discern more than one feeling in a moment. And the classic example is this idea of confidence or conviction, which is a feeling, and having some trepidation or fear involved. I've found that having both of those is a very good combination. Whereas, when for me, when I notice what the dollar value is, either what I expect to make or what I expect to lose, that's a bad trade for me. So again, track the combinations of thoughts and feelings within the context of trading, and you'll see patterns that emerge, and some are going to be helpful and some are not. Like, why does the same setup work sometimes and not all the time? It's my contention that as we really understand what's going on within us, we could start to really understand which ones are going to work and which ones aren't. That's pretty advanced, but that's what it is. It's this idea of, the George Soros story where he had a stomach ache and he got out of all his positions. I think that's true. All right. So then next one here, are there situations that create automatic decisions? What are the setups or what are the situations that create that repetitive mistake? What is the repetitive mistake? And then really dive into those moments. And again, it's an iterative process where, oh, I did it again, dang it. And for me, I help my clients move the timeline back to before the trade happens. Again, it's this idea of creating space to make choice. And then creating awareness helps create choice, and attach a feeling context to the P&L. Again, that goes back to this idea of being able to discern at times which setups will work and which will not. But overall, be curious and compassionate. Don't take that stick and beat yourself with it, the metaphorical stick. Trading is hard. And so here are kind of some techniques to unlock this door, right? Create habits and routines around this skill so we can create an edge that will really be helpful to your trading. So the morning routine, everybody talks about it. I think it's super important. It's a way for us to connect with our feelings. Wake up, how am I feeling today? You can journal it. You could speak it into the phone. You could just think about it. I find a mindfulness practice very, very helpful, both breathing and meditation. There's lots and lots of breathing. I think box breathing is great. I meditate. And for me, I love the meditation because it really is a great way for me to practice this notion of recognizing what feelings come up and then just validating them, and they go. There's no reason to get caught up in a feeling and play it out for 45 minutes. Create a trade routine. Again, this idea of what feelings are coming up and where in the body are they happening. So really, as we get good at this, the self-talk moves from the mind to the body. And there are these feelings that come up. Gut feel is an example of one of them, but there are feelings that come up that we just know. And so that's where we want to get to. And then creating an evening routine is also helpful. This idea of recap the day, what repetitive feelings, any patterns happen in that day, what went well, and actually celebrating what went well. There's this idea. I spoke to this guy who was at a prop group, and I had a similar experience where the guy next to him was super excited about, making a good trade. And the risk manager came over and said, what are you excited about? This is what you're supposed to do. So it's this idea that as traders and athletes or high performers, we expect the baseline is high performance. And so we kind of undervalue that. And I believe we overvalue this idea of mistakes. So for me, creating a more balanced approach, being able to celebrate wins, but also recognize weakness, I think is a great sweet spot to be. So that's kind of brings me to the end. These are some books I think are fantastic. Denise's book, Market Mind Games, is great. 7.5 Lessons About the Brain by Lisa Feldman Barrett is outstanding. Fooled by Randomness is every trader should read that book. And then this Art of Learning by Josh Waitzkin is a fantastic book. It's he was a chess prodigy, made a movie about him. He's a really interesting guy. And then, if anybody's interested in coaching, I for people on the webinar, I'm willing to offer a special coaching offer. And so what I'm doing now is I have year-long contracts with my clients, but I'm willing to waive that and do a package of 10 or whatever the case may be, if anybody's interested. So my email address is jpb@therethinkgroup.net. My Twitter handle is @jpbjr800. And I think that's it. I'll be happy to answer any questions. I hope I didn't speak too quickly, but yeah, I'm happy to answer any questions that are out there.
All right, thank you so much for that wonderful presentation. And I'd like to open up the floor to our audience. Any questions that you have that you'd like for John to answer, kindly post them in the Q&A section.
Yeah, as we wait for the questions, I thank you for your presentation, John. I just have one question when it comes to intuition, and I don't want to be gender biased, but when it comes to that self-talk and listening to yourself, like where do you draw the line between the mind and the heart, for instance? So like, how do you tell what's rational, when it comes to trading and execution?
For me, it's the iterative process of trying it out. So, keeping track of that heart feel, if you will. And for me, I get it. The feeling that I get is kind of just above my stomach or in my stomach. And that usually is a indication that what is going on in my mind is attached to my body and therefore intuition. I don't know if that answered the question, but there's also this idea of, if I might add just real quickly, this idea of self-talk as a primer for performance. And I do agree with that. I didn't specifically talk about that in this talk because I wanted to talk more about, being able to get to the intuitive voice. But I think there's value in priming ourselves, especially if we prime ourselves with the appropriate primer. So some people need to be super excited. Like on the trading floor, I was chewing gum every day because I felt that it helped me stay active and in motion and my mind ready to roll. Other people need to kind of be more calm and relaxed. And so, being able to get to that state that they need, I think is great. Also, one other technique that can be used with trading and anything really is a guy by the name of Lanny Basham, was an Olympic shooter. And he used this is his system. And he used this idea that when we do something well, when we have a good trade, we need to anchor that in our unconscious, subconscious and say, man, that's like me. I make trades. Those trades are my trades. I really do well on those trades. And when we get stopped out or have a bad trade, we say, trading's hard. Trading's hard. And so it creates this idea of getting some positive reps and really feeling them and anchoring them and understanding that trading's hard. So we don't anchor the mistakes, which most people do the opposite, right? Me included at times. Yeah.
Okay, Thank you. And we're having a question from Raphael, who's asking what your training package is, and do you have someone in mind who also can do account management, or do you also do account management services?
I don't do account management services. I will specifically talk about trading systems. Obviously, I've been around a long time, so I've seen a lot. And I do speak with my clients about their trading systems and help them understand how to match their belief system, value system with their trading system, because there's an unlimited number of ways to trade. We just need to find the one that works for us. And, that has to do with time frame and market and all sorts of stuff. But yes, I help with that. The package is open to discussion. It would be 10 appointments at some value. I don't know what that is. It could be my typical rate at this point is $500 an appointment, which I know is a lot, but I'm willing to, for the right person with the right attitude, to work down from there a little bit. So, yeah.
All right, thank you. There's also another question coming in from the chat area from Nicholas. What can we do to keep ourselves in the right mindset after losing streak? Say losing 10 trades and you have a setup to take another trade.
Two things. One, the first thing that pops into my mind is that expected on your back testing or your trading system so far. Is that expected? If yes, then take the next trade. If no, then we need to figure out why there were 10 losses in a row. If it's a purely discretionary system, we need to go back and look at those 10 trades and say, oh, I didn't trade my system on 5 of these trades. Okay, so then what we really need to work on is trading the system as we stated it, and then seeing how the results come about. And then so for me, it's about understanding, primarily first it's understanding the system, and then it's understanding ourselves. So I would say that going back and looking at the run, is that expected in your trading model system, back test, then going from there. But trend following system, that can happen. So, and as we know with the trend following system, you have to take every trade. You have to be all in, because if you miss the one trade that makes 2,000%, you miss the whole year. So again, it is for me system specific, person specific, but generally 10 sounds like a lot unless you're trading a trend following system on a short-term basis, and it's really a review of the trades.
Okay, and regarding the fear of missing out, when it comes to dealing with that fear of missing out on a trade and risk taking, is there some kind of like a correlation between some risky trades that people can make because they have that fear of missing out on a great opportunity? Does that kind of tie in as well to risk taking?
Yes. So what I'm hearing in that question is this idea that the fear of missing out overtakes the ability to take the trade, and we don't take a trade that runs. I think that's what that question says. But the fear of missing out usually is this impulsive feel, and it's usually the voice that is saying, you got to do it now. You got to do it now. You got to do it now. You're going to miss it. You got to do it now. You got to do it now. And as we know, rationally, there are a lot of trades. And for me, that was a big signal that something wasn't right. Like if I had to do it before I did anything else in my life, I knew that I was in trouble. And so it's this idea of impulse is insistent, loud, consistent, keeps coming after you. Intuition is quiet and soft. An intuitive feeling comes, says, hey, do you want to listen to me? And if you say no, it's gone forever. But that impulsive voice will just keep going and going and going until we get control of it. So that the impulsive voice and the fear of missing out, I believe, are connected.
Okay. And Mark was asking about the books on the last page that on your presentation points. If you could please share that last page again, maybe you could share your screen so that they can have time to write down the books.
Absolutely. There we go.
All right. Are there any more questions?
I think those are all the questions.
Great.
Yes. So thank you so much.
Thank you. Thanks, everybody. That was a lot of fun.
Yeah. Before you leave, John, we'd like to express our gratitude to you. We'd love to have you again in the future. Thank you so much for making the time. And of course, guys, we will link down John Barnes' contact information details on our YouTube channel, which the recording will be up next week. In case you need to refer to his recording for future reference, and also our previous webinars, you can access that through Sylvia's Traders Lounge Forex channel on YouTube. We also continue to ask guys to keep opening trading accounts live or practice accounts with Scope Markets Kenya to apply the lessons shared by our special guest today. And we do appreciate your time, John. It's been a pleasure to learn from you, and we hope that we can have you again sometime in the future.
Yeah, it was great. Thank you so much for having me. It was an honor to speak with you guys today, and I'd love to come back.
All right. Say hi to Denise and the entire Rethink Group team. Appreciate it. All right.
All right. Thank you. Bye.
Cheers.
Thanks guys for tuning in and sticking with us to the end. We hope you have learned something new. I would like to appreciate Scope Markets for sponsoring this webinar.
Remember, you can open a live trading account with Scope Markets and apply the lessons shared by the guest in this webinar to your trading.
Many thanks to our guests for speaking to us. We'll be open to have you in the future. Till next time, goodbye.